Hi, this is Mike Swanson. I got Mike McGowan with me. And for those of you who remember, he's an advisor to USA Capital, and he sometimes contributes on the website. How you doing?
I'm doing great, Mike. How are you?
Oh, pretty good. Well, both of us were out of town last week. You went to the Denver Investment Conference, and I went to the Toronto Gold Show. So how was your trip?
Oh, Denver was amazing. I was able to get some really good information, not only on the industry, but on specific companies, and had a great time down there in Denver. It was just, it's kind of a unique forum because you get access to such, it's hard to get access to, all of the company's CEO and top management, and they're all gathered in one place. And so it was a great trip for us.
The show I went to, it really seemed like it was dead, like there weren't many people attending it.
Because they're all in Denver.
Well, I mean regular investors or retail people. Because last year there was a much bigger audience. And that's right, a lot of the companies and some of the analysts and so forth were at the one you went to. But one thing, like for me, I go to the trip to go on these trips to meet with different companies and get an idea of which ones are worthwhile to invest in. And maybe that's something to talk about next week, and certainly talk about some of these companies over the next couple of weeks as gold puts in a final bottom if it hasn't already. But one thing about these shows is, at least the one I went to, a lot of the sentiment, not just among the investors, but among the panelists speaking, was very negative on gold. Did you see the same thing?
Actually, short term, I think there's some inhibiting factors on gold, but long term, I was very convinced, and so is the industry, that gold has a tremendous upside, and if we get a chance, maybe we'll talk about that.
Yeah, for sure. Well, one thing I noticed, a few speakers, and some of these people write on Kiko, so I think most people are pretty familiar with what I'm talking about. I've actually written about it a few times over the past couple of months, but a lot of people seem to have this thesis that the economy is slowing down, and along with that, the stock market's going to fall, and that's going to hurt the commodities market. And during the summer, they're pointing to a collapse in copper, aluminum, nickel, and also the stocks that mine those metals, and they were calling this what's the name for those metals? Oh, shoot.
The base metals?
Yeah, exactly, the base metals. And so the theory is that China is slowing down, is going to slow down too because of the United States and all the demand's coming from China, and as a result, the base metals are going to collapse and take gold down with it. And I don't buy that argument at all. And one thing I noticed technically, and maybe you can go through some of the fundamentals about gold in just a second, but technically, as far as the charts and using them, a lot of these base metal stocks, they fell really hard before the gold stocks did. But over the past 3 or 4 weeks, they've actually bottomed and been basing and outperforming the gold stocks. So I don't see them leading gold stocks lower. In fact, it appears as if for the short term, the opposite seems to be happening, and I think that bodes well. In fact, I think that if we didn't see a bottom this last Monday and the gold stocks were, I think we have. I'm not so convinced about the metal. I'm still on the sidelines waiting for confirmation of my belief that we did see the bottom. But I think, going forward, even if we haven't, the downside's very limited, and by the end of the year, stuff's going to be much higher anyway.
Yeah, I agree. The thing of it is we have to remember that, those cowboys, I live in Montana, so there's these cowboys with hats on, and they got these big vests on, and the reason why is bulls don't like to be ridden,
Sure.
They like to kick everybody off, and as much as they can, they want to run this course by themselves. And I think that's maybe a crude analogy, but that's really how we have to look at what's happening, because the fundamental pictures for commodities in general and gold specifically are still very much intact. A couple of things that that came up on the short term that I just thought we would bring to the subscribers' attention is whenever you have monetary policy, which we've seen in the Federal Reserve, when that starts tightening, that commodities and gold in particular doesn't do well in monetary policy tightening environments. We've had real interest rates have risen substantially, which, as you know, has limited the supply of capital, and are at level where gold prices have stalled. And especially if you were looking the early 90s, you'll see we're right at the exact same levels that the gold price has really stalled. And the thing that's interesting is that the Fed, at least for the time being, Bernanke has really pulled back and kind of stayed on the sidelines and not put any more tightening into the short-term interest rates, which should bode well for gold over the long term. That's one thing to keep in mind, the reason why we haven't seen gold continue to really go up exponentially. The second is we're starting to see a lot more recessionary data come out in the economy. And recessions are not really good for any commodities in particular. And those are, you can see that from the recessions of the 1970s and 80s. You can see how hard that type of environment hit gold. But it's interesting because the last recession, which came in, from 2000 to 2002, didn't have a noticeable impact on gold at all. And the reason for that lies within the quick monetary policy response that the Federal Reserve took. They saw recession coming on. They started to basically do a 180-degree and begin to loosen those monetary policies. In other words, lower short-term interest rates to get things reignited. And that's when you saw the massive growth in gold. And so I think that those are the two things on the short term that may be a limiting factor. I don't think once we start seeing a lot more recessionary data, I think the Federal Reserve is going to have to begin to loosen, or it's going to throw the U.S. economy as well as some global economies into a recession. And I don't think that's going to happen. And I think that'll bode very, very well for gold once we come out of that.
Well, we certainly live in a very interesting market environment besides just gold. Last week when I was gone, the Dow, flirted with its highs, and there a lot of negative housing data came out, and from what the press was saying, that helped fuel the market up because there seems to be this belief that if we get negative housing data, the Fed's going to end up lowering interest rates, and that's why the stock market went up, which I think that's all strange logic because that makes it sound as if the housing market is the center of the whole economy, which that wouldn't be a good thing.
Right. And the other, the thing that you have to keep in mind is that the short-term rates, they can help for a little bit, but they can't stop the long-term fundamental freight train. I think one of the reasons why we're spending so much time on this, and I totally agree with you, Mike, is just to let the subscriber base, once you start seeing these prices, it's important that we reevaluate our fundamental purpose of why we believe in commodities and gold in specifics.
Especially after this recent correction we've had.
Exactly. And, I guess I walked away from Denver with a lot more conviction on the long-term aspects, and I hope to really touch on those. One of the things that we did talk about last week was the central bank's role in the current downdrift, and I think that that's certainly was part of the massive decline that we saw going up into the first part of October.
Can you hold that thought for a second?
Yes.